So last week in the Canadian economy, we have a lot of housing data, including housing starts, existing home sales, and CPI. Can you tell us a bit more?
Yeah, for sure, Simon. So, as you mentioned, we had a lot of Canadian housing data last week, including housing starts, existing home sales, CPI, as you mentioned, as well as two indexes of home prices across the country, the MLS Home Price Index and the Terranet National Bank HPI. So March did see a slowdown compared to February, as well as March 2021, in terms of both sales and inventory. While historically high, home sales recorded over Canadian MLS systems fell approximately 5.4% between February and March, and were down 16.3% from the all time high recorded in March 2021. Supply also remains tight, however, with newly listed homes down 5.5% month over month. Future supply does appear constrained as well, as housing starts fell 2% month on month. The indices for home prices represent a slightly more mixed picture. The MLS HPI reported a 1% increase in Canadian home prices month on month and an 11.2% increase year on year on a non seasonally adjusted basis. On a seasonally adjusted basis, the prices were up 27.1%. And it's worth noting that seasonally adjusted is a little bit more of an accurate representation. The Terranet National Bank Index indicated that prices rose 2.1% month on month and were up 18.4% year on year. The CPI, the official measure of Canadian inflation, notes that shelter rose 6.7%. And as you can see, there's a pretty big discrepancy between the official inflation figure and what some of these other indices are telling us. So that's all for the recap, Simon, and it's over to you for questions or comments.
Great. That's very interesting. So, as we know, housing has been like a very big subject. Actually, the Canadian market, the housing market, has been one of the hottest in the world recently. So, in your opinion, can you tell us what you think caused the housing inflation in Canada?
Yeah, great question. So I think there's a couple of pretty distinct factors. Obviously, there's interest rates, which have been, low for a very long period of time. It makes it easier to take out mortgages. There's a lot of liquidity in the market. So that has definitely contributed to, some of that inflation, particularly from investors in Canada.
Mhm.
But it's not just the interest rates, because if you look at the US and Canada, they've had very similar interest rate environments. But in Canada, the gap between average wages and the average home price is widening significantly, whereas in the US it still remains relatively normal. So it's not just interest rates. Another major factor, but take it with a grain of salt because it's a little bit difficult to measure, is foreign ownership.
Mm.
Um, it is a little bit difficult to measure. Officially, the figure remains low, but there are ways to kind of circumvent that foreign owner tag and the associated taxes. So people do tend to want to do that. At the moment, there's no open registry of ownership, so it's very difficult to see which individual actually owns, that property. So, so that's one thing. And then, of course, there's very limited supply, and there's a lot of demand. So those fundamentals just cause the price to skyrocket as well.
Great. Well, I'm glad you touched on that, on the foreign investors. Like, as you know, in the most recent federal budget, we heard that there was going to be a foreign ban on housing investment in Canada for the next 2 years. Any thoughts on that?
Yeah. Well, one would expect that if foreign owners are banned from buying housing, it would cause less demand and prices would go down. However, as we mentioned earlier, there are a lot of ways to kind of circumvent that tag. I expect people will continue to do so. Um, it's it's also worth noting that the last time similar regulation was enacted, it wasn't a ban, it was a tax. I believe in 2017 in Vancouver Metro and the GTA, we did see prices decrease somewhat. although that time did coincide with some credit controls in China as well, but we did see prices decrease. So one would expect that we could see prices, we could see the pace of acceleration slowing somewhat, not just because of foreign owner ban, also of course because of rising inflation, rising interest rates. But yes, I don't think there's going to be any kind of crash. There's a pretty high level of credit quality in Canada. It's not like the US in the recession. I don't think there's going to be a crash. I think there will be, slowing acceleration. Instead of seeing 27.1% price increase in a year, we'll see just a more normal level of inflation in housing.
Yeah, sounds good. I think a lot of investors would like to see a cool down, and I think it's just a healthy thing, especially for first-time homebuyers. And as you know, there's also a rate hike that you touched on that. It just started recently, and we expect it to keep on going for many months now. Any thoughts on that, and how it might affect actually, well, the real estate market?
Yeah, I think if anything, the rate hike will have a bigger impact on the housing market than the foreign ownership ban. So I think, it will be more difficult to qualify for a mortgage. It might make it more difficult for multi-property owners and, people who are flipping houses, just a little less liquidity. But again, I don't think there's going to be a huge change in prices or a huge slowdown in prices just because there is so much demand and so little supply. I think, a month or two ago in Toronto, there was 30 homes for sale in all of Toronto. So whether there's not foreign home buyers allowed, whether it's more expensive to take out a mortgage, there will be buyers for Canadian property. So I think the market still looks fairly bullish, we can say.